We're also watching shares of GameStop this morning. Keith Gill, also known as Roaring Kitty, appears to have increased his position in the company. He posted another YOLO update on Reddit last night, reflecting a stake of more than 9 million shares and just over $6 million in cash. That compares to just 5 million shares and 120,000 call options against GameStop back on June 2nd when Gill first started reporting his GameStop positions. It's not clear whether he sold some or all of his GameStop call contracts or he exercised some of the options early to try and add to that GameStop stake. We had seen that earlier, the volume that had picked up, and a lot of traders were speculating that that was him liquidating some of that call option position. GameStop's annual shareholder meeting yesterday was disrupted by computer problems as the servers there crashed under this overwhelming interest. A lot of people trying to log into the live stream. That stock this morning is down by about 1.3%. For the year to date, it's up by 63%, 28.73.
I don't know what to make of that.
I don't either.
We're also watching shares of GameStop this morning as Keith Gill, of course, Roaring Kitty, appears to be increasing his position in the company. Gill posted another YOLO update on the Superstonk forum on Reddit last night. It appears to show he's holding more than 9 million shares and just over $6 million in cash. So take a look at the chart. You can see shares are down about 3% right now in the pre-market. They're down 39, almost 40% since Gill returned to YouTube last week. Big drop off since Roaring Kitty's big return.
You want to talk about GameStop and Keith Gill? Because that's what I was.
He is.
We should mention it because.
You know what? He's now the man. He has so much money. He's become the man. He was sticking it to the man. Now he is the man.
He had options on 120,000 call options. They were going to expire on June 21st. He seems to have sold about 80,000 of them, but
he
essentially exercised some and went from 5 million shares of ownership to about 9 million shares.
That's a huge position.
It is a big position in GameStop. You can figure out the math there.
They've got to break all those leases and move into another business. He is now the third largest shareholder after Vanguard, never mind, Ryan Cohen is.
Ryan Cohen. Yeah, but he is the second largest individual shareholder.
You got to hope that Ryan's got a game plan, David. What do you think he's
$10+ billion market value. They've raised $3 billion in new equity. They already had $1 billion in cash. So they got about $4 billion in cash.
They can break every single lease. They can write a check to Simon Properties, write a check to everybody, get out of that stupid business, reinvent themselves. It's something that's worth more than 30, and I think they'll do that. Okay. It makes too much sense.
Okay.
There's your man, David. Einstein.
There it is. It's a week ago since we got that great performance. Genius. Just pure genius.
What's Picasso say about that?
Yeah, Picasso has a lot to say. Or as I refer to him, Pablo.
Pablo?
Yeah, Pablo.
Did you take spots and dots at art appreciation
I
course?
did not. I did not.
That was a gut. Listen, hey.
Pablo, when he died.
You just need to know Frank Stella.
Pablo was
you know Frank Stella.
We're just thinking everything's Spain. Everything's
that's a great country, man. It's a great country.
Yeah.
Yes, Keith is now completely out of his June 21st call options, and he now owns a whopping 9,001,000 shares of GME stock. That is incredible. Considering this meme Keith posted the other day, and given his sizable position in GME now, I would love to see Ryan Cohen and the board invite Keith to become a member of the GameStop board. As was mentioned, the annual meeting of stockholders was postponed yesterday due to technical issues. CNBC reports that a computer share representative confirmed that it was due to servers crashing under overwhelming demand. Later in the day yesterday, GameStop published a press release saying the annual meeting of stockholders has been rescheduled for Monday, June 17th at 11:30 a.m. Central Daylight Time. That's 12:30 Eastern and 9:30 Pacific. I think it's important to have reasonable expectations going into the stockholder meeting. I do not expect GameStop to announce a merger or acquisition at the meeting. It is possible, but I would not expect that at all because these things take time. Nevertheless, I'm looking forward to the meeting, and I'm excited for the future of GameStop, especially considering that the company now has $4 billion to reinvent its business model in a meaningful way. I'll also share this post from Larry Chang once again because it's very relevant to GameStop right now, especially so considering Larry's connection to GameStop and the company's sizable cash position. Larry posted, quote, "Do you remember when Berkshire Hathaway was a textiles company? American Express was an express mail business? Nokia was a pulp mill? Samsung was a grocery trader? Marriott was a root beer stand? Instagram was a check-in app? I don't. Businesses evolve. Other examples? I don't know what GameStop will become in the future, but I want GameStop to survive, to thrive, and to reinvent its business model in a meaningful way, and I am rooting for them. And regarding the financial markets, what individual investors want is simple, and nothing we're advocating for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds. which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers, and we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.